market volatility on the minds of most investors right now, advisors have to find a way to keep them focused on the long term. Here today with Gerard O'Reilly of Dimensional Fund Advisors to talk about the foundations of investing and keeping investors on the right track right now. Gerard, welcome.
Thank you, it's very nice to be here.
Excellent, thank you. Explain broadly how advisors should be helping and thinking to help keep their investors focused on retirement right now.
I think there's a few big things to keep in mind when you're saving for retirement, and the first thing is keep saving. So in as much as advisors can keep clients disciplined and staying the course, that's a good thing. The second important feature is making sure you have good investment solutions to put those savings to work for you. So I think advisors focusing on both of those aspects can really help keep their clients disciplined and on track for retirement.
So talk about how you weave in academic theory to create portfolios that are suited for both today and tomorrow.
I think the first item that you need is a good philosophy. And at Dimensional we have a strong belief in markets, and we think that prices reflect the aggregate information of all market participants. And so when we think about building a good investment solution, we always start with the market, and then we look for ways to enhance expected returns over and beyond what the market portfolio can give. So that's how we begin bringing in that academic evidence into how we build portfolios and manage money.
So markets, as you mentioned, are a little unsteady right now. How do you keep that client steady when markets are so volatile?
Well, that's where the philosophy comes in. If you have an understanding that prices are forward-looking, always looking to the future, well then changes in prices mean changes in information or expectations about the future. Those expectations are already in prices. You don't have to worry about what prices have done. You have to worry about what prices are going to do going forward. That's uncertain, unknown, so discipline is important. So that philosophy to maintain the discipline, I think, is the key feature to having a successful investment experience.
Now, philosophically, a lot of investors, a lot of advisors are thinking about a diversification. Now, extreme diversification can help right now, but how can you get a client thinking along that mindset, when conditions are so crazy and volatile?
I think the most important thing about diversification is that you should have it, and then the second most important thing about diversification is understanding what it implies. When you're well diversified, if you're doing your job and delivering a well diversified investment solution, there are always going to be components of that solution that are the worst returning and always components that are the best returning. So as you look across a broadly diversified solution, keep that in mind and don't say, hey, I want to get rid of those worst returning stocks or bonds that have been the worst returning over the past month or year. If you're doing your job right, you will have those and you'll have the good returning ones as well. So I think making sure you're well diversified because it helps with reliability of outcomes is important. But then remember what that means and what the implications of that are, so it sets expectations for the future.
So last question, what's next? What should advisors be thinking about? What should they be communicating to their clients as we look towards the end of 2015 into 2016 and beyond?
I think the things that they have been communicating up to now are the same things that they should keep communicating. Keep on saving for your retirement, keep on investing, markets, and the expected returns on markets, price is set to keep those expected returns, in our opinion, positive. And so keep a disciplined approach and not be too bothered by all the things that are going on in the world because markets are factoring in all that information and setting prices to a level where they should be.
So really it's a matter of staying disciplined even when markets are volatile.
Yes, I agree with that statement, yeah.
Excellent. Gerard, thank you so much for taking the time to join us today.
I appreciate you having me.
Absolutely. For Investment News, I'm Matt Ackerman.